So markets just closed a little while ago, and markets across the board were red. Dow Jones down about 350, NASDAQ down about 75. I believe tomorrow, if I'm correct, I believe we get the job numbers tomorrow. Now, will good news actually be bad news? Will this give more incentive for the Fed to continue raising rates if the job numbers come in good or better than expected? Now, please stay tuned to the entirety of this video. I just got back. Many of you wanted me to go out to more of these housing developments and show you what's going on. So I just went to another housing development today, walked it, and I'm going to show you what's going on. They're building houses all over the place as quick as they can at astronomical prices. Who can qualify for these homes? Who's going to buy these homes at this point? So please watch this video to the entirety. It's absolutely fascinating to see the amount of homes that are going up right now. They cannot build them fast enough at record high prices. So on top of that, we have record gas prices, record inflation, record debt, record deficits, record crime. Everything is absolutely out of control. Stay tuned, watch this video. It's a beautiful Thursday, October 6, 2022. I want to start the day out by stopping at this gas station, showing all of you gas prices in Southern California. Right out here off I-10, Palm Springs, California, $7.19 for Supreme. And I was reading an article today right here on The Hedge. Gasoline prices keep climbing, but retail gas station margins plunge, with many now underwater. This is going to be the next problem here in America, is gas stations, and they're going to do whatever they can now to put them out of business. They say on average gas stations do about 3 to 7 cents per gallon. That's what they make. So apparently the system thinks that that's too much money. And don't forget that, you know, they make most of their money at these little stores, you know, with food and soft drinks and candy bars and all that. And people are buying less gas now. Again, 3 to 7 cents per gallon. That's what they make. And now they are feeling the wrath of this economy and a lot of pressure on gas stations. So what happens when the gas stations start closing up? We have less gas stations. Prices are going to continue to go up even more when you have less gas stations. Diesel, $6.77 a gallon. And this is absolutely getting out of control. I don't know how people are doing it. You can see behind me, cars are driving. I'm going to get on I-10 here in a second. I can see it right here, a lot of cars out there. I don't get it, other than the fact that people now are using credit cards in order to get from point A to point B. But this is going to get really, really out of control and be a very, very serious problem here. And the price, how is the average consumer, the average American, keeping up with $6.77 for diesel, $7.19 for super, which many cars require, regular $6.89. It's getting more and more difficult every day for people to survive. So I'm at a Del Webb project here in Rancho Mirage, California, and just wanted to show you around. Some of you wanted to see more developments. I was at this development probably about 3 months ago. I'm going to turn this around. If you look way out yonder, that is Agua Caliente, the Indian casino, about 1 mile away. And there are hundreds of homes going up. And this development probably already has 1,400 homes completed, roughly. Don't quote me on that, but probably at least a good 1,000 plus homes completed and more in the process right now. Framing, roofing, all that taking place right now. But before I go any further, I want to say something about yesterday's video. There are people out there that I think completely misunderstood what I said, and these are probably people that didn't watch the entire video. I said, sell your house. If you're thinking about doing it, this is the time to do it. If you don't need to sell your house, don't sell your house. If you're in a great location, you've paid it down or you've paid it off, you have no reason to move, you're comfortable, don't sell your house. I said, sell your house if you're thinking about doing it, if you have to do it. then this is a time to do it. So I want to be very clear about that, because there were people out there that totally misunderstood what I said, more than likely because they didn't watch the entire video. But again, if you're thinking about selling your house, if you need to sell your house, this now is the time to do it. Now, I want to switch gears, and I want to comment on something a little bit different here, and that's Florida. I'm watching the news yesterday, today, and there are people in Florida and organizations asking for donations. Nothing wrong with that. I get it. The people need help. My question is, why does Florida need donations when we have all this money in America, yet we are sending tens of billions of dollars to Ukraine, but we don't have some money to send to Florida? The people of Florida have to beg and ask for donations, just like our military has to ask for donations, because apparently we send money all over the world, but we can't send it to the people and the states that need the help. And I think that's repulsive. It's almost embarrassing to think of where we're at today, that we have a state like Florida needing to ask for donations when we can send $10 billion over to Ukraine like that. We're talking about doing another $625 million arms package and billions more. I mean, it's absolutely, absolutely absurd. But while I'm walking around here today, let's take a look at this. Incredible. But right now, as I walk down the street here, you're quite aware, and I'm aware, that we are in a massive housing recession. And some of the fastest growing areas in this massive real estate bubble, the areas that grew the fastest are going to be some of the, just like the one I'm in right now in Southern California, these are going to be some of the fastest areas to fall, without a doubt. But when I walk through this and I see this, it's incredible. It's really an incredible sight to see what is going on. And right now, as I reported yesterday, mortgage apps are at a 25-year low. You think that these builders aren't worried right now? You know, when you look at the 40, 50,000 Ford Super Duties parked in Kentucky at the Speedway, sitting there, you know that there are going to be huge sales coming in the auto market and the truck market. And when I see the amount of new homes being built in Southern California, I took you out to Beaumont and those areas, and here we are in Rancho Mirage. Who can qualify right now? Today, I believe the 30-year, according to bankrate.com, 30-year fixed rate is sitting right about 6.89%. That's with excellent credit, ladies and gentlemen. These homes right here, by the time you buy the lot, by the time you pay for the all the upgrades, you're looking at anywhere from $650,000 to over $1 million. Who is doing this? So security just came by, said I don't have a hard hat. They don't want me to step on a nail. So I can respect that. But again, bankrate.com, 6.89%. And we are looking at mortgage rates now that are at 16-year highs. Now, this gentleman who just asked me to leave, very polite, very kind, but he knows what I'm doing here. And he didn't really want to answer any questions. And but he wanted to ask me some questions, what I'm doing here. And I just said it's none of his business. But anyways, I'm going to continue filming here. And again, just look at this. Just an incredible, incredible sight. But as we carry on today, let me just get to a little bit of the news. Peloton cuts another 500 jobs, completing a vast majority restructuring. Year to date, Peloton down 75%. How in the world can the market, as I make this video, be down only a couple hundred points? Yesterday, pretty much flat. A couple days before that, we gained 1,600 on the Dow. And we are seeing more and more layoffs. And when you look at these new home builder stocks, you look at Peloton, you look at the airlines, you look at the cruise ship lines. I mean, it is insanity what is happening, the devastation in these markets, yet the market hasn't collapsed yet, but it's going to. So there we have it right there. There's Agua, the I-10 freeway over there. More homes popping up over here. GE laying off 20% of its workforce devoted to onshore wind power, costing hundreds of more jobs. Year to date, GE down 32%. And markets they're not collapsing today, but they're going to. They are not going to be able to stop what is about to happen to the housing market, what is happening to the economy. They're not going to be able to stop it. It's going to continue to get much, much worse. And as it does, we're going to see developments like this absolutely come to a freeze or a lockdown. And how many of these homes will sit here uncompleted, or we're going to see major, major discounts in pricing, or a combination of both? It's going to be very, very interesting, ladies and gentlemen. As I'm walking through this development, more car buyers pay at least $1,000 a month for their car loan as high prices, rate hikes deal a 1-2 punch. Vehicle sales are down 19%. If you think that this economy isn't collapsing, you look at the automaker shares and you look at auto sales. It is getting absolutely crushed. 14.3% of consumers who financed a new vehicle in the third quarter committed to payments of $1,000 or above per month. That's up 8.3% from a year ago. Interest rates on car loans now sitting at 5.7%. That's up from 4.3% last year. Average new car price, nearly $46,000. So here's another part of the development right here. If memory serves me correct, I think there's going to be roughly about 2,000 homes in this development when it's completed. And there's going to be, I think, a lot of people here that are going to really regret that they bought a home in the last year or two and paid what they did, because these prices, I think by next year, we're going to see huge corrections. The year after, even bigger. And I do believe we're going to see a major, major crash. Very interesting article today on CNBC. Despite inflation worries, Americans are less likely to cancel Amazon Prime and Netflix. This is why we are in so much trouble as a country. This is why so many people are not going to weather the storm. This is why so many people are going to get wiped out, because they cannot cut back on these luxuries. They'll cut back on groceries, clothing, gasoline, but they're not going to cut back on their Amazon Prime or their Netflix. And this is absolutely shocking, yet not shocking, because you know the zombies just like I do. You know, people want to live in Fantasyland. They need to get out of the matrix right now. If you're one of these people that just is addicted to Fantasyland, Amazon, Netflix, all that, you got to get rid of these addictions right now. These are the same people who have absolutely no preps, no silver, nothing but excuses. And the reason is because they can't put down the 2 lattes a day at Starbucks. They can't stop their Amazon Prime. They can't stop watching Netflix. They can't stop living in Fantasyland. And these people have no idea the storm that is coming, the velocity of this economic storm, the magnitude of this storm. They're going to continue to go out and buy houses, buy cars, completely over-leveraged, everything on credit, believing that they're never going to lose their job, they're never going to have a wage cut, inflation won't affect them, they'll never have an emergency, they'll never ever have any obstacle in life. And of course, the economy in the US is fine, it's great, it'll never crash, it'll never collapse, the dollar will always be fine, their stock portfolios will be fine. Wrong. They've trusted a system that has suckered them and bamboozled them, and they're going to pay a huge, huge price, ladies and gentlemen. Be very, very careful. If you're in Fantasyland right now, My advice to you is get out ASAP, get out immediately. This stuff is all coming to an end, ladies and gentlemen. It is coming to an end, and people are really going to get hurt, and people are going to look back and they're going to not believe what they did and how foolish they were, and the amount of debt that they took on, not looking at the dangers, not looking at worst case scenario, what could happen. You got to prepare for worst case scenario, ladies and gentlemen. This thing can get really, really bad. Imagine these builders right now. They've got to be panicking, shaking with the amount of money that they are spending in a market now where inflation is 8.3%, realistically 17 to 20%, interest rates near 7% today, and you have a pool of buyers that is shrinking every day now because of inflation and mortgage rates. Very few people now can finance a house like this, be qualified for a loan to get a house like this. And we're gonna have more of these homes coming up. There are so many homes under construction out here in Southern California and throughout the country, and they are going to get stuck with a lot of them. So I'm gonna leave it there today. I've got a bunch of errands to run here, but I just wanted you to check this out and think for yourselves a little bit. Critically think about what's happening now and where all this is going. God bless.